Welcome back. You're watching Buy Now Sell Now on ET Now, and moving forward, and let's connect with our management. We want to be focusing on Welspun India. The company has come up with its numbers, and this time around it has been an upbeat performance with an impressive guidance going ahead, where the company expects the margins to be 15% going ahead from the current levels of 13%. So let's understand what is giving the confidence on the margin expansion and the sales growth, and what are the factors will be at play as per the management. Onto the show, we are being joined by Dipali Goenka, CEO and Joint MD at Welspun India. Hi, very good morning, Dipali, and thank you so much for joining us today on ET Now. Firstly, you have given a quite a strong guidance for FY24. Tell us, what is the on-ground situation? What factors do you believe will be at play for FY24? And along with that, we're also getting comments from the retailers suggesting that we are at the fag end of the inventory destocking cycle. Some green shoots for demand finally emerging for you. How do you see the situation?
First of all, let me just give you a perspective, and I'll just put in as a trend as cautiously optimistic. And definitely, there are reasons for this because there's destocking that has happened. We are at the fag end of destocking of the inventories at the retailers' end because they were holding some, kind of high-priced inventory as well. And this will actually might continue till quarter 1. But yes, the trend has begun. As you see, the cautiously optimistic next year for us, definitely when we talk about the core business globally, our freight costs have come down dramatically, like over 80%. Our cotton prices, which actually are now at 60, we are looking at around a 60,000 to a 65,000 cotton per candy. So that is where that is also going to have an impact. Now, when I look at Welspun India, I must tell you that our basket not only looks at the core business, it also looks at the emerging businesses, which actually contributed 34% of my top line this quarter, and which will continue to grow at the same rate and will be at 45% at 2026. So, overarchingly, the business is looking cautiously optimistic, but the domestic business, our emerging businesses, will continue to grow aggressively as well.
Right. A very good morning to you, Ms. Goenka. This is Cheryl also joining in the conversation. And let me actually put the spotlight, move away from your numbers actually, and talk about what's been happening with Bed Bath and Beyond. We all know that they've recently filed for bankruptcy. Could you highlight your exposure to this account, and also what are the provisions that you have in place? Any concerns that even investors should have in this?
So for us, and I think I'll maintain, and I've spoken about it in the last interview as well for Bed Bath and Beyond, and I think I'll not talk about any retailer here, but Welspun is truly covered, and our business interests have reduced with most of these kind of retailers. We're completely risk covered for even if these kind of issues come in, in the terms of credits and the others as well. So that there's complete true sense of governance that we, work towards. And yes, so we are completely thoroughly, sure about our and your concerns if there are any here.
All right, that I'm sure will allay all concerns or any concerns if in the mind of your shareholders. But do you believe that there's some bit of indecisiveness with regards to orders due to the macro volatility that we are witnessing in the United States as well as Europe? Would you say the demand has begun to bottom out? And also, if you believe so, then by when do you expect to return to a normalized demand level?
As I maintain, we are cautiously optimistic. America is a resilient economy which contributes around 34% of the home textiles, demand and consumption. So we have seen that it has defied, the perspective on we have had retail sale of around 2.8% this year, which has actually been actually very, very positive. UK, Europe are continuing to be a little bit on kind of a downside. But I will definitely say that Welspun continues to be cautiously optimistic, but this will also be owing to the destocking of the inventories that we've seen, and also because of the commodity prices coming down relatively. We know that, the recession is looming around. Those are kind of things that we have continuing to talk about. But however, Welspun is geared up in the terms of what the demands are looking like. and we maintain that we will maintain a growth of around 10 to 12% this year, and 15% EBITDA for Welspun India.
Okay, but Dipali, since you have a target to be net debt free by FY25, so how are you looking at, how confident are you to achieve this particular target? And along with that, as per you, which segment will support you the best in a manner to get net debt free by the next 2 years?
So let me give you our complete perspective here as well. Last quarter, we were over 2,000, in our debt. Today, we are around 1,500. And our core business in a couple of quarters will be absolutely net zero. It is about our new investments that we've done in flooring and advanced textile. We maintain that next year we'll be below 1,000 crores in our net debt, and going forward by 2026 we'll be net zero as well. And if you're talking about the businesses, again, I'll maintain core business is one aspect to it, but our emerging businesses are continuing to grow and continuing to grow stronger, and that's going to contribute. And domestic business, look at the domestic business, and India being the North Star in the kind of consumption as an economy. Our business grew 30%. We maintained that. We have been EBITDA, absolutely EBITDA zero here. I mean, we have actually, we are looking at we are going to be, growing that at 30% next year as well. Looking at even our working capital, we have been cautiously taking a prudence on our working capital exposure in retail in the terms of, lower inventories, turnaround times, inventory turns, as well as debtors as well. So definitely that's also going to pay as we go forward.
Apart from announcing stellar set of quarterly results and also giving a very healthy guidance, your company also announced a buyback of up to 195 crore rupees. Could you tell us what's the rationale behind this, and also would promoters be participating in this buyback?
So promoters have always participated in this, and I will tell you, this has been a trend with us for for the past 5 years. 30% of the free cash flow goes into this every end of every year, and this has been the way that we have distributed annually, end of the year, and this has been something that we maintain as kind of a tradition or a culture.
Okay, with this, Dipali, we'll let you go on that. Thank you so much for joining us today on ET Now and helping with the outlook for Welspun India, and wish you all the best for the upcoming quarters.
Thank you.
So that was the management of Welspun India. We're going ahead. They believe that the domestic business should support the sales growth for the company, and not just that, if we look at their guidance going ahead, so they have given a guidance to be net debt free for by FY20.